The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling out here with us. Dow Industrials right now, we are up 37. You get the NASDAQ up 17. S&Ps are up 3.5. And this is going to be Fed Day, folks. At 2 o'clock, you'll get the announcement. 2:30, you get a press conference. There's a great quote in the den here. And this is so true, too. Let's see. Where is this? And here it is. Good old Terry. It's a beautiful thing, Terry. I asked myself, when was the last time this Fed said something that tanked the market? Bottom line, there's no doubt. And I don't expect there's anything that they're going to say that's going to tank the market. I do expect the market's going to pull back. And what that's going to be on, it just has to do with the aspect that, bottom line, they're going to come out, it's going to be status quo, and they're going to say once again that, yes, we are going to raise the rates. And they are eventually going to raise, 25 basis points. The way that we're moving right now, I suspect it's going to be in 2016. The market itself, folks, is raising the rates. That's what's going on. The bond market is, bottom line, moving lower, higher yields. And, this ABC structure that is happening in the 10-year right now and the 30-year will basically raise rates itself. That's the first part. The second part is kind of intriguing. And what the second part is that the rate structure itself seems, if you go to get money, the rates are higher than what the Fed is projecting that they are. Because the reality is that, okay, we're 1/4 point. Bottom line, the only people that can get that is if you're at the Fed window. Okay, so what does that mean? It means absolutely nothing, because you can't go to a Goldman, a Citi, a Bank of America, or anyone else to get that kind of money. It just doesn't happen. Bottom line, that's the installation for the banks. Does it mean anything? I don't think it does. That's the first equation. The second equation is that we're just in distribution. And I suspect once this announcement is over, we're going to get some action. And that action, more than likely, is going to go into the dollar. The thing that is absolutely a little mind-boggling right now is that technically the dollar is in a beautiful ABC structure on the way down. It's broken a B point on a small basis, done it with volume. It's come off the high with volume. It wants to go test that lower swing low. We'll see whether we get volume there. That is counterintuitive with the Fed rising rates versus not rising rates. So what we may get here is that the Fed might say, hey, listen, we're not going to go until 2016. Then it's going to be like, okay, what is the reaction to the marketplace going to be? Then we have the gold market. Okay, the gold market has been dead in the water. If we take a look at this contract, what we've had with the contract is that they haven't been able to bang it down. But simultaneously, there's been no buyers. Okay, so there's no buyers, there's no sellers. Someone's going to win out here. The way that the gold contract is trading, I expect what we're going to see is that we are going to see that lunge up to the 1232 area. And the reason I'm going there is that, first off, when we came off the lows, you had good volume all the way up to that level. We backed up with dramatically lighter volume. And what we've done is this, and this is where it's subtle. Let's put this on. I'm going to put this on a daily for you, and you can see what I'm talking about. What we have done is that on there's two separate areas. One was on Monday. Monday we surged higher with volume expanding. Okay, we did 86,000 contracts, 130,000 contracts rather, as we moved into the 1190 area. Now the price didn't hold. We ended up closing at 1185, and we're 1178 right now. 2 days prior to that, on the 10th, we surged to 1161, not 1191. We did that on 125,000 contracts. Closed out 1186, same deal. That's building strength, and that's going into the swing, which we had a nice little pop with volume up to 1204 on June 1st. So what you're doing there is that you are pushing into that swing with volume expanding. When you push into a swing with volume expanding, that's where it wants to go. So when I look at that context, it's like, okay, man, the baby hasn't moved. There's no doubt about that. But where that setup comes in, that setup's telling me that wants to push into there. If we go over to the dollar index, you have just the opposite inside the dollar index. The dollar index has been flat. What we do have inside the dollar index, however, is that the last 3 days, that dollar index has tried to get to higher price, hasn't been able to handle higher price. We have a small ABC down. When we broke the B point, we broke a B point on the 10th of June. Well, the A in this is 98.13. Your B is 95, so you get $3. Your C is 97.34. So with that, just that price projection gets you a 94.34. Well, the swing point that I feel the dollar index is going after is that last swing low that's out there. That's 93.47. So when I look at that, it's okay. That wants to go down and hit that. The real key is going to be as we get down and get into that level, do you get into that level and do you have an expansion of volume? You get an expansion of volume, that is a much larger ABC structure on the way down. And what you'll get at that particular point, I suspect you'll get moves inside the commodity market big time. Let's go over and take a look at the oil market, because what we do have with oil is up here at the 61.43 mark. Oil, we're going to get some oil numbers this morning. The way oil is trading right now, though, it doesn't look to me, let's see. So has she hit the, well, she hasn't hit the 62.15 yet. We're at 52,000 contracts versus 189,000. Okay, so oil, what oil is doing is this. Oil is testing the swing high that was established out here on the 10th. Oil's going to need a lot more juice, though. And so the way this is trading at this particular point, number one, it hasn't hit the 62.22. She is going to need some big numbers, and I believe that we get that out at 10:30. So we'll have that in another 15 minutes. You'll see some volatility inside that market, though, no doubt. Our phone number is 877-927-6648. We go over and we take a look at the E-minis, see where these are shaking out today. On the daily basis, what you have, you're already basically backing down. You're backing down off those highs. When we go take a look at Europe, folks, you have the CAT down 0.7%. The DAX is off 0.3. The FTSE is down 0.4. And if we do go over to the FTSE and we take a look at the FTSE, what you do have is that the FTSE broke into a much lower level, folks. And this is a big heads up. So the FTSE had broken its swing point. The swing point we're talking about was the 10th. Of June. We did 740. It didn't have as much volume, but bottom line, it broke it and it can't get back inside it. So the FTSE is setting up to get into the 6,200 area, and we're at 66 right now. The DAX in Germany, and these are good heads up as to what the probability would be as to where our markets want to trade. The DAX in Germany this morning has already rejected higher price. We got up to the 11,115. Right now, you're trading right about that 11,000 mark. Inside the Dow, what's the strength inside the Dow versus the weakness? You have Chevron, dead cat bounce, that's up 85 cents. Intel is up 25, Caterpillar up 54, and Boeing is up 90. Bringing it downtown, you get Visa's down 38, United Health's down 41, Apple's off 40, and Goldman Sachs is down 36. Now, those are light numbers, big time, when you take a look at the strength versus the weakness. Inside the NDX 100, bringing it higher is a Baidu, that's up 451. We have Yahoo up 85. Western Digital is up 182, and Celgene is up 174. Taking it lower, Adobe is off $1. We have Netflix down 496. And Express Scripts is off 52 cents. Some of the Dow stocks out here, we got Big Blue up 55. You got ExxonMobil up 34. Oxy is up 41. Let's go over to the oil patch. We'll take a look at ExxonMobil, because what we have had is this, folks. ExxonMobil, Chevron, they're screaming for lower price. They've gone lower for a considerable amount of time. They're out, let's see. So on a weekly basis, 72 million. We're going to bang out. Let's just see what Exxon's doing is testing its weekly right now. So 9.5 is a 45. Well, that'd be interesting. So on a weekly basis right now, it looks like ExxonMobil, it will be testing that low that was established, and it looks like that it's going to be on lighter volume. So let's see. If I put this on a weekly, you'll see how this is shaking out. The low that was established at 82.68. Thus far, it looks like that's going to be on lighter volume, lighter by a good amount, too, by about 20%. So we'll keep our eye on Exxon, see if Exxon can get any juice as it tries to climb out of this area. Some of the higher volume stocks, and we'll see whether we're going to have high volume today in the marketplace, is that we have GE is flat. You got Intel up 29, Yahoo's up 79. We go over to Big Blue and see what Big Blue's doing. Big Blue, so Big Blue just come back to a small sign of strength that it had on the 10th. So the 10th, we went up into that gap. So today's a big day for Big Blue. So this way, yeah, it's a big day for sure. Because we had gone up on 4.6 million shares. We come back down on 4.2. We're right at that level right now. It's going to be how does Big Blue handle the 161.90 price point. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow Industrials up 23. Nasdaq up 15. S&Ps are up 2. Gold's down 310. Stay right there, folks. Come right back.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning, you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now up 23. You get the Nasdaq up 15. S&Ps are up 2. And let's go. I guess we have this the IWM going after its highs. So the IWM, of course, is the Russell 2000 ETF. That little baby out here. Oh, I love it. Okay, so check it out. Let's put this on a daily. So the number we're talking about is 127.13. We have hit 126.96. This is really bizarre. Man, I tell you, when you get up to the hundreds, folks, just any number in general, but when you get to the hundreds, it's like, how does this work? How do you just try to get up there and touch the number? Thus far, you know, we've been 17 cents off the number, 18 cents off the number. What is pretty neat out here today is this, is that you talk about a contraction of volume. Man, they don't have anyone up here buying this thing. We're at 3 million shares. And you're going into 37 million, which, by the way, 37 million was light volume. We came down on 72 million. And what's pretty neat here is that how we went up on the 10th. When you see an expansion of volume and you don't make it to the swing point, that's always a larger heads up that when you make it to the swing point, you want to watch it. And this is what it is. So picture whether you're swimming, you're running, whatever you're doing. And you're grinding it, right? As you, let's say whether it's 1 mile, 2 mile, 3 mile, whatever your deal is, right? If you use too much energy, too far away from the finish, it's a problem. Because what happens is this, and that's what I'm relating to on the IWM. What the IWM did is that it used a huge amount of energy on the 10th to try to get up into the swing point. Didn't make it. Now it rests for a few days, tries it again, but today's not the day. Because the way this is trading today, you know, all it's doing is setting up another test and another, looks like this particular point, a failure of that test. What will happen is this, is that when we go into 2 o'clock, you will see volume in this market. You know, what was unusual this week is that we got volume on Monday on the way down. That is a probability, a higher probability that we're going to go down because Tuesday, Wednesday, and Thursday in the summer is where it's at, not Monday and Friday. We're dealing with Wednesday, so the market's going to have 2 days here to really have some movement, whether that's going to be up or down. So we'll see where the whole thing does shake out. But when we do look at the large equities still, bottom line is that they're continuing to lower price. The transports are still having a huge problem. It blows, you know, it actually blows my mind that the transports can be this far down and the Dow still be that far up. The thing that's intriguing is that there's so many bulls out there that you don't even hear the bulls that are in the Dow theory. That bottom line is that, you know, the transports and the industrial, the NYSE simultaneously supposed to trade somewhat together. They don't have to be totally together, but the transports certainly can't be off like they are, meaning down almost 13% off the highs. and you expect that the Dow Industrials are in good shape. That's just not the way it goes. So we'll see where the whole thing does shake out. The Dow Industrials are setting up a nice ABC structure on the way down. If we go over here and we take a look at, there we go. We take a look at the diamonds. What you're going to see inside the diamonds is that this is like a classic too. Is that we came down as the diamonds came down. They're trading at 179 off the high of 183. We came down with 5.5 million. Yesterday you did 3.2. This is a large ABC structure down, and the 8 point on this is 183. Your B is 77. So we got what? That's not that bad. That's only 7 points, 6.5, 6 points. That gives you 174. And see, 170, yeah, that makes sense. 175 is your swing low for March 26th. That's the ABC structure inside the Dow Industrials. That's how that baby is set up right now. So we're going to see lots of action out here today. There's no doubt about it. The question is, do you want to short the IWM? Let me put the IWM back up. I'd be short. Well, I am short the NASDAQ, okay, the NDX, but that is to me, that's the weakest indice. But let me go put this up on a 10-minute for a second. IWM. Okay, so IWM, and I'm sure they want to do the TZA. No, I wouldn't short it still. No, I wouldn't short it. And I'll show you as soon as we come back. I'll show you why. It's the first get-go up here this morning. Actually, last night. It's going to be hard for this. No, I'd give it more breathing room. This is Tom O'Brien. This is TFNN. You stay right there, folks. Be coming right back. Dow's up 27. Nasdaq's up 14. S&Ps are up 250. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 29, Nasdaq's up 14, S&Ps are up 2.5, and we'll see where this whole baby is going to be rocking and rolling. The oil numbers just come out, and the drawdown was a couple. Let's see, where is she? CLQ5. Oh, this is so funny. The story that comes across saying oil rose on speculation, but the bottom line, folks, is oil is down. Okay, this is supposedly a new story, but it's not, because the U.S. Let's say, I'll get this for you. Oil. Bottom line is that you get oil trading lower. It can't handle those highs that are out there. And the drawdown evidently wasn't as big as folks thought it was going to be. If we go take a look inside the futures market itself, what you have, crude oil out here today, gasoline and diesel was up. Bottom line, you'll start seeing those babies. They're backing up right now. I suspect they're going to back up more. Well, it's going to be intriguing out here is how the dollar and commodities react to the Fed. That's going to be a big number. Now, let's go over, here we go. Let's go into the IBB, because the IBB, folks, has not pulled back. Now, there's a, let's see. Yeah, I got to get this stat for you, because this stat is insane. So the IBB right now, we're at 367. It's actually going for a little swing point. Yeah, it's the IBB is going to, this is like bizarre, but the IBB is going to test this high. Do not short the IBB yet, man. This is just amazing. The IBB wants lower price, but this is what it's done. The high of the IBB, and the high is really a spike high. So a spike high specifically, folks, is something that you've been going up, up, up. It seems like it can't go up any further. You go up dramatically. And we did that on the 20th of March. On the 19th of March, the IBB had closed at 365. It opened at 374 the next day and just sold off. But it's like a high volume high. But it's not real high, but it is a high volume. We're inside the bottom of that now, which is 363. When you're inside the bottom of that, just let it go hit the top. You know, the way that the IBB travels, we're only talking an aspect of 74. That's nothing for the IBB. You're talking about You're talking about 7 points away from that high. That high is going to get tested. You know, so what you do is you let it get up there, let it get into it, and then that market's going to talk, walk, and squawk to you at that particular point. It'll either get up and over the high, without volume, fail. I would let that whole thing get up into that area before you do anything with the IBB. The fundamental numbers on it are absolutely insane. and I'm going to try to get that before I get on the air this afternoon. I had them last night. I'm trying to figure out where I got them from. And what the fundamental numbers that I'm talking about is this, is that the 100 stocks that make up the biotech, the larger biotechs, it is some like outrageous, oh, I know, here, let me give you, this is where this article was. Let me find this for a second. Let's see, most. Because wait to hear this. This is crazy. This company yesterday went public, a biotech. It has a market cap of, I think, $3.5 billion right now. Well, and I brought it up last night, but I didn't, on the show last night, but I didn't realize this was the number because I got the information when I was doing some work last night. Well, that company that only has one drug bought that drug off Gilead. Now, they bought the drug, and it's an Alzheimer's drug, folks, okay? It's the beginning of one. Well, they bought the drug in March off Gilead for $5 million. That's it, $5 million. The market cap, I believe, on the stock, can someone find, and then the biotech stock that went public yesterday, because I believe that when it went public, it doubled in price, and it has a $3 billion market cap now. So picture this. A company buys the drug off Gilead April, May, June, 90 days ago, for $5 million. That's the only drug they have right now. They go public, and I'll get you the actual market cap. But anyway, that no doubt, okay, is the makings of a monster bubble. Yeah, oh, I love it. Yeah, oh, I need that picture. Because that is a bubble extraordinaire. That's not even like, that's like, I was looking at that saying, you got to be kidding me, man. Could you imagine if you are in the middle of that, you buy something at $5 million, you push it out to the public for billions, and you're not done yet. You're just beginning. Oh, pretty intense. No doubt about that. That's about as intense as you can get. The S&Ps, bottom line, no movement out here. The setup is really nice, though. The setup is a nice short setup. We're going to get some action out here. I think you're going to get a decent clue, more than likely, off the dollar as we start moving into that 2 o'clock time frame. You know, the dollar right now is quiet. We're at the 95.28 area. And bottom line is that I suspect what you're going to have is that the Fed's going to say that, okay, we're going to go up, but now we're pushing this thing off to the end of the year. And you know how this is going to go, folks. If they push it off to the end of the year, that means 2016. That would imply that, yeah, the dollar can get weaker. You know, the Greece deal, bottom line, Greece is going to basically default. You know, that's the way this thing is shaking out. Their prime minister said he's ready to assume responsibility for the consequences of rejecting an unfair deal with the creditors. And the bottom line, folks, is that they elected him because he told them that, listen, man, he's going to be a hard bargainer. And, you know, that's the way it's going to shake down. You know, everyone's putting on a strong face here, but the bottom line is that what you're going to see is that those German banks, okay, are going to get hit, and they're going to get hit quick. The real key is that who is on the other side of those trades. The other side of those trades are going to be what can rock things. That's what it comes down to, because we did those debt numbers yesterday. It's not that it's a lot of money. It's a $100 billion in the course of 4 years. That's not a lot of money. Where it's going to be is at what fund and who is over-leveraged on that trade. That's going to affect something else. That's the whole domino effect. Then it's really going to come down to the aspect of fast currency moves. And fast currency moves take traders, operators, large funds, large companies by surprise all the time. If I've learned anything in the last 30 years, is that the largest moves in the marketplace have to do with fast currency moves. And it blows my mind that larger companies that shouldn't be in the currency business end up hedging right at the exact wrong time. And when they do that, hedge at the exact wrong time, many times there's these blow-ups because they listen to a bank or a broker-dealer and they seem like they are in a no-lose situation. And remember something, in a trade, there's always a lose. There's no such thing as a no-lose situation. There's a defined risk situation. And the defined risk, that if you have a defined risk, that's a beautiful thing. The way that the currency trades have been set up in the past, though their defined risk, they haven't been defined risk trades. That's what it really comes down to. Let's go over to that gold market. So as I was just talking there's some movement in gold. The gold's down 610 right now. So intraday, let me put this on a 10-minute and see if we get any juice. GCQ5. Okay, so 38,000 contracts. You're coming into, this is good. Okay, so check this out. We're coming into 0400 from the 15th. That's 6,200 contracts. Let's see how many minutes we've done. Now, let's get some time. We're only 3 minutes into this bar. Okay, and right now we're at 2,600. You know, we'll see whether we get the volume. Thus far, the volume is not behind the move. But, you know, we got plenty of time left in this 10-minute bar. So what we're dealing with is that this baby, if you take, I'll put this chart up here so you can see this. You put this chart up, we're dealing with 1171.90, and you're dealing with 6,200 contracts. Let's go to Ken in Kansas City. Hey, Ken, what's going on?
Good morning, Tom. How you doing?
I'm doing great. I'm doing great, man. How you been?
Oh, they're pretty good.
That's a beautiful thing.
I want to take a look at the steel stocks, PKX. It's a South Korean steel company, and I think it's at a 10-year low. I was wondering what you thought about it.
Okay, let's take a look at it. Manufacture various types of steel products, hot rolled steel, cold rolled steel, stainless steel. The low, that's today, set $48.57. The high's 86. They pay a yield of 5.6%.
I don't think they paid a dividend for some time, though.
Oh, really? That's pretty bad. I appreciate that. That's bad information on Bloomberg's part. That's not good. Okay, look what we're doing. Okay, so let's bring this back. We'll put this on a monthly. What we're doing here, folks, is that you're testing the 2008 low. Wow. Okay, so 2008 low, $40.01. Let it get there. It's moving on. So this equity has, you have the volume contracting, Ken, which is great, by the way, okay? But you're so far into the bar that I suspect it's going to test it. So I'd let it test it.
Okay.
You know, and it'll probably take, you know, it'll take another 5, 6, 7 weeks to get down there. Let's see. 50, well, maybe not. Oh, this is interesting. It's already gone 7 points this week. This month, rather. No, it might be quick. Now, what you want to make sure of is this. $40.01 is the low. What you're looking for is this. You're looking for, you come down to it, you test it with lighter volume, you reject it. Once you reject it, that's not the buy. Then you got to wait for a sign of strength. You get a sign of strength. After that, then you buy the next retracement. Because what you're looking for, folks, is this. When something comes into a low and it rejects it, all that means that there's no more sellers. But you need buyers for higher price. So that's why you wait for the sign of strength after rejection. Then it backs down, and as that backs down, what that will do is it's going to tell you, are there buyers or sellers? And most of the time, after a low is established like this, it backs down after the sign of strength with lighter volume. That's your buy. Because then at that particular point, you actually have a price projection because of the expansion topside after the test of the low. Cooking, brother.
All right, thank you.
Okay, man, have a great one. Have a safe one. And that says quite a bit, too, that, you know, the amount of building that has been in China, you know, at some point, it has to slow down. It doesn't have to slow down like for years, but even 2 or 3 or 4 months in order to catch up, maybe 7 months, catch up, then the whole cycle starts again. But that says quite a bit. Let's go just look at our own U.S. steel. So if we take X and we put a good old X up, she's trading at 23. Yeah, this is the same type of setup. So this has a high volume low at 20. It also has a high volume low at 1666. Yeah, this one's actually U.S. Steel wants to trade at 1666. So the steel business right now is not a great business to be in. The high volume low in the U.S. Steel is March of 09, and that's never been tested. That's gonna, this market wants to go after that low. So we'll see how it handles it once it does come after that level. We take a look at, let's see what good old Walmart is doing, because Walmart slowly has been making its way down to this 70.25 level. Walmart's up 24 cents today. Dead cat bounce extraordinary. I mean, zero volume. It's pretty amazing, actually. This has been, you talk about straight line move, 90 to 72. And it only has a few more points. You get a few more points under your belt into that that 70.25 level, then you'll see some real destruction. What has held up here are the financials. The XLF bottom line has held. We'll see. Let's put this on a weekly for a second. And yeah, you're right at those highs. The high that we're talking about is 25.14. We've hit 25.16 today. You close under, this might be the test. This is going to be really cool today, so check this out. Okay, so we hit June 10th. June 10th, we get to 25.14. We do it with 43 million. Following day, 48 million. That's the number. It's 25.20, 25.06. Those are the two benchmarks you want to be keeping your eye on. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Folks, I'm going to go through this. It's Axon, A-X-O-N. This company, now check this out. This is pretty amazing. This is absolutely amazing. This company, it wasn't Gilead they bought it off. It was GlaxoSmithKline. They bought a drug, okay, that had already failed, okay? GlaxoSmithKline had spent a fortune in years testing this drug. It's called SB 742457 for dementia. Okay, bottom line, didn't work for them. This company bought it. In fact, the kid's 29 years old. he's made a fortune already, but this is the story. 29 years old, he bought it. He was a hedge fund manager, turned around, and okay, so the reason that Glaxo gave up on the drug was simple. It didn't appear to work, or at least not one that used alone. After testing the drug for months and more than a dozen clinical trials, the drug showed no effects when given to people alone. But in one trial, when it was given along with a widely used drug called anacetrapib, which is a prescribed drug right now for some folks that do have Alzheimer's, what it did is that it slowed down the confusion and memory loss. They showed a slower loss over time of some of the measurement of brain functioning and daily capabilities. Well, the bottom line is that this guy ran with that, period. This is his quote. We think we have a great drug candidate, he told Forbes. If this drug is approved, we think it's going to make a huge difference. A lot of patients, ultimately, there's huge need, and we have a great team in order to do it. The bottom line, and this is amazing, so check this out. This company has zero income, yet it has a market cap, as it stands right now, at $2.1 billion. $2.1 billion, folks, okay? That is a bubble. There's no other way around that one, baby. That's amazing. Anyway, you couldn't make up that story. You know what blows my mind about that? Is that just seems so far out that you can actually make a deal like that. Buy something, but he knows, guess what? The guy, 29 years old, coming off even a fund, that's really a lot of experience knowing that Wall Street can push anything they want if it ends up being pushed at the right time. Because when something is pushed at the right time, folks, the frenzy is there. It's just like if you go fishing, you keep a lot of, smelt in the water, you get the boil going for the bigger fish to come in. Bottom line is that those bigger fish, they don't even look around, okay? You get that water nice and oily, Bottom line, they'll hit anything. That's exactly what he did with this equity. This is going to be a trip watching this whole thing shake out. It's so far out, it's unbelievable. Now, today, what do we have? Okay, so you got a flat market right across the board. Oil gave it up on price. Oil selling off with volume off the highs, by the way. The dollar is out there at 88. You can expect that you're going to get a little more selling pressure as we get closer to the 2 o'clock time frame. After that, you're going to see 2 or 3 real fast spikes. Inside the bond market, inside the dollar index, we'll see how this S&P straightens out. Thus far, what we have inside the S&P is that you have a higher high, dramatically lighter volume. That's setting up lower prices coming into the close. When I say lower prices, too, not dramatically, but I suspect everything's going to be red. You stay right there, folks. That man, Mr. Basil Chapman, is going to be coming up next, growling with you. Dow right now is up 41. Nasdaq's up 16. S&Ps are up 3.5. Basil's coming right up, folks. Have a great one. Have a safe one. Look forward to speaking to you this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.